Hey everyone, just a quick check-in with the markets this morning. They really do seem to be holding their breath in light of upcoming information that we have. I think the big thing is Jerome Powell speaking at 12:40 today in Washington. That's going to be something to watch, hopefully shedding light on that jobs report that we had, and depending on what he says, if he gives any indication that there's going to be more tightening or if he just reiterates, we'll really be looking out for that flavor to come out as he gets interviewed at 12:40 p.m. Eastern time. So that's something to watch for. Also, yesterday I put out a video about balance of trade that comes out at 8:30 a.m. and we'll watch that and see what impact it will have on GDP for Q4 2022. So depending on whether we get a widened deficit or a narrow deficit, and where we come in according to expectation, according to consensus, my apologies, that's really going to again influence what we see in the markets. So that said, I'm Dr. Stock, Doctor of Education. Let's get right into some charts. I have the SPY brought up here so we can see the recent price action. And we can see on February 1st, we have a big old run up, an even bigger run up on Groundhog's Day. Came out to look for its shadow, and I guess it saw it and gave us at least a couple of days so far of winter. And we have a bit of indecisiveness yesterday, some low volume trading, and I think the market really sort of settling down a little bit from the excitement that we had leading up to that point. I think we're waiting on further economic reporting, see what Powell says today, and the market could get pretty crazy right around that noon hour to 1 o'clock. And well, I think all eyes will be there to find out what to expect in terms of inflation and whether or not Jerome Powell sees this jobs report as something that is going to be a one-time thing, a one-off thing, or if it's something that we can expect to see continue. Let's move on from there to the Qs. There we go. Very similar chart here. And you can see we don't have that same golden cross pattern that we had before. And well, hopefully we get it. Now that narrowing has happened before. And yes, we were on our way and it failed to happen. So if we get a big sell-off in the markets, we might not see that happen. However, if we get good news and we get this continued push up, that is something that would happen. I do anticipate that the market is going to continue to settle. I don't know that we'll either get anything that we like to hear from Jerome Powell, or I think that we'll get things that we don't really like to hear from Jerome Powell today when he speaks. I think it'll end up having a negative impact on the market. And well, we're just going to have to watch and see. At the very best case, I think that he's not going to tell us of anything important. And, the market either trades sideways or maybe there's a little bit of levity that comes from it. The big thing that we have following that is consumer sentiment that comes out on Friday the 10th. And that is something that could be a very big catalyst for markets. We're going to have to see. There's also geopolitical tensions with China cropping up. And, that's something that we just want to be aware of, and we want to keep an eyeball on to watch for any signs of escalation, as that could be bad for markets. And if there is signs of de-escalation, well, that'll likely be slow and not as apparent, but it's definitely something that we want to keep the ear to the ground and listen for any rumblings. Just a few other thoughts that I had for this morning. I was looking across some of the big tech plays that we have, and if we look at where they're currently sitting, they're above their 200-day moving average. This is Apple that we're looking at, and sitting pretty much at support right now. And if I zoom way out, there we go. You can see that we've kind of peaked out around this area before, all across the chart. And also these lows that we have sort of bouncing off it. I think the 200-day is going to be the first area of support that we really run into that's going to be significant for us if we continue to see a drop. And if we rise up, we have some pretty hard resistance at 157. So I think that's like maybe 4% up from where it's at right now. Seems about right. So on the way down, let me see, down to 147 support power. So 2 to 3% down for 4% up, depending on the direction that we get. We will really have to wait and see what we get from Apple. Let's go over to Amazon. And when we look at Amazon, Amazon is stuck. It did break up above its 200-day moving average, but you can see now it's stuck in between the 50-day simple moving average and the 200. So it did break above it, and that was nice. Had a nice little ride up. Earnings came out. The market wasn't very impressed by those earnings, and so now we're stuck in between them again. So if we break below that 50-day, if we break that support, then we might revisit those lows that we see, and that could be in light of significant negative economic pressures. So that's something to watch out. And then finally, the last one I'm going to go to for this morning, just check out Google real quick. And I think that they're also sitting a very interesting spot. I think that they have some very hard support where they're at right now, but the 200-day being that area of resist. Look where that on the day before. So on February 3rd, so on Friday where they closed out, is just at the 200-day. So peaked above, dropped below, so broke support, and now it's acting as resistance for us. And so we could also be stuck in between the 50 and 200, and on the way up from there, we have, maybe room for a 1% to 2% move. So I think that we're at a critical point in the markets right now. We could see if we get not a lot of really interesting news, we trade sideways for a little bit longer, and maybe we fall a little bit from here. It'd be nice to see slow movements in the market instead of the wild movements, because that euphoria that we feel is intoxicating, and then when we're intoxicated, we make poor decisions. Or we're more likely to make poor decisions, such as getting a little bit too greedy there. And also when things fall and we get upset about how rapidly things have fallen, then we also make hasty decisions, such as not sticking to our plan and selling when the market's at the bottom. So those are some thoughts that I had for you today. I just wanted to stop in quickly and share. I really thank you for listening along. If you want to check out more of what I have to say and see my research, it is available over at the Patreon. That link is down in the description. Also, I'm getting close to that 15,000 subscriber mark. So if you know somebody who hasn't subscribed, or if you haven't subscribed, please click that subscription button. Really push me up over that 15,000 mark, and we'll keep this channel growing, and I'll keep those services and products going. Thank you very much for watching. I'm Dr. Stock, Doctor of Education. See you in the next video.